Welcome to Option Trades today. I'm Tony the Bat Batista, and you are here in downtown Chicago, right in the Bat Cave. We're going to take a look at today's market, and I've got a trade idea for you today. But first, as we always do, let's take a look at the market. Even the S&P is trading near their highs, up 17.75, up 18 now. As you can see, even the S&P's highs are about 2 points higher, 32.75. I'm just quoting those last four numbers. It's 30.50, we're about $2 or 2 points off of our highs. NASDAQ up 35. Doing the same, Russell up 13, and the Dow is up 189. They're all up around the same on a percentage basis. Maybe the NASDAQ taking a slight breather here relative to the rest of the markets. Volatility in by 5 cents. If you watch this podcast on Tuesday, I talked a little bit about how, I don't think even if the market goes higher, how much lower will volatility go. Kind of proving that point right now, sitting down 3 cents at 13.90 with the market going a little bit higher by almost, if you were looking at it last week, we've had quite a nice 4 or 5 days in the overall market. Hey, I do want to mention something to you because I got a lot of emails about some of the trades I put on, and all I have down here is IVR. This is the IV rank being plotted on the bottom here, and all I put is a simple daily chart on top. People ask, why is that the only thing I use? Because that is the only thing I use. I don't do anything else, but the Tasty Trade platform has a plethora of studies that you can use in here. You can add them to your study on the bottom of the charts, either on top of or next to. You just got to click on them and they'll come on this side. I use IVR. That's all I use, and then click add select and stuff like that, and then you'll save it. It'll be saved in your chart. So there are plenty of, for those who like to chart, there's plenty of things to chart, plenty of studies to look at to chart, if that's what you like. But what I show you here is the only thing I look at. I look at a little bit of what the market is doing, and then I look at implied volatility, and I have it plotted down here on the bottom. So, as I have done in the past, or have not done quite lately on the podcast, let's go to the high option volume list. I'm going to change this to IV rank, go from high to low. You already know, if you've watched any of these, that I'm going to avoid these stocks that have earnings here. And just to prove a point here, you can see that all the stocks with earnings are inflated by high implied volatility. Trying to point out here to you that I like to avoid earnings because I sell premium, and if volatility or IV rank is going to continue to expand going into earnings, I have to be directionally right. If I have to be directionally right, then 50% of the time I'm going to be wrong. So I'm going to look to avoid those stocks that have earnings. I'm going to go down here to a stock. Well, I'll put it up here so it'll turn white for you, and tell you why I'm going into Boeing today. I've avoided Boeing for the most part throughout this debacle. I think it's kind of shaked itself out, and Boeing's going to go a little bit sideways. That's my own little market analysis here. You can see here in Boeing, the stock was about $1 or $2 lower. It's trading about 50 cents off of its highs, up 69 cents right now. But the interesting thing for me is, over the last 5 days, with volatility on its lows, making new lows now, down 10 cents, and the overall market being strong, Boeing being relatively weak, the implied volatility has hung in there. It's basically unchanged with a nice IV rank of 45. Hard to find another stock that I like to trade that has tight liquid markets, that doesn't have earnings with a higher implied volatility. It could be the highest implied volatility IV rank on the board. So that's what I'm going to look at. You know what I like to do? I like to go around 45 days. 43 days in June is going to be the closest. I did want to kind of catch a falling knife in Boeing. I was hoping it would go down a little bit so I could do like a ratio spread, either 1/2, or I was going to look to sell a naked put and a call spread above. But I decided to do, since it is really had a nice rally over the last couple of days, is really just go and have the stock try to beat me. So I'm going to do a classic strangle here around the 15 to 20 delta options. I'm going to do the 165 put, which brings me right to that standard deviation line. That's that dotted line across the platform there. I'm going to sell the 165 puts, and I'm going to sell the 200 calls. I was able to do this at $3.63. That is the mid price right now. It uses around $2,000, just about $20 north of $2,000 in buying power in a margin account. Obviously, my max profit is whatever you sell it for. I sold it for $3.63 or $3.64. We can check in a moment. It does give you 1.5 short deltas. I consider that delta neutral. I do get a lot of emails and questions on the YouTube chat sometimes, and I do look at all of them, and I do try to answer all of them to the best of my ability in a timely fashion, because I know money, this is money out there, and it's your money and my money too. All of these trades I make, of course, that I show to you here. Why would you ever come up with a trade idea and not do it? That would be stupid. For me, at least, I couldn't believe that person. But anyway, here's the dotted line to the upside, which is the standard deviation to the upside. Here's the dotted line to the standard deviation to the downside. You can see this green line is our win area, or where we make money. I'm just outside the standard deviation to the downside. I'm just outside the standard deviation to the upside, which to me means it's a great high probability trade. Pop of 71%, just letting the stock try to beat me. $11.30 in theta decay for holding this position that has a negative 1.4 short deltas. The question I was going to answer for you now is, I get when do you roll up or down the untested side? Well, I never roll the tested side until I go from 1 month to the next, meaning June to July. Now, I say never. 95% of the time I won't. I always move the untested side, meaning if the stock is going lower, I'm going to move the call down. If the stock is going higher, I'm going to move the put up. On a strangle, it really won't use any more buying power. But I am managing delta. So when do I make that move? It's not subjective to the chart, or if it breaks fills a gap, or does anything else like that. To me, I just use a pure math model. When this delta gets to plus or minus 15, I am looking to roll up or down the untested side to reduce my delta and make it plus or minus 5. So for argument's sake, if Boeing were to continue to go lower and this delta gets to a positive 15, because remember, as Boeing goes lower in a strangle, I'm actually going to get longer, and if Boeing goes higher, I'm actually going to get shorter over time. So if Boeing were to go lower and this delta gets to around plus 15, I am then going to roll down my call to get to around plus 5 or 7. Gives me a little bit more room to the upside, so that if we get a little reversion in price, it works out fine for me, and I collect a little bit more premium as I do that. So it's not my opinion of when I roll. I just let the math roll. I try to keep my probability of success in that 60 to 70 to 80% pop, and I keep my deltas in line. You can always see these trades, whether you're listening to this now without my background to it, but you can always listen to what I'm doing on my podcast. I'm sorry, on the YouTube channel. You'll see here in Boeing, I did get filled at $3.64. It was the same pop, 71%. Ivy rank was a little bit higher at 46. You can see here, I just wrote a classic delta neutral strangle at around 20 deltas on each short strike. I got filled at $3.64. I pushed these out as soon as I do them. I did it at 10:05 this morning. When Boeing was just a little bit higher by around 30 cents. But you can see how volatility is starting to contract a little bit in Boeing, because they're not doing anything today. Believe me, if Boeing starts moving around a little bit, obviously this number will change, probably favorable for you. You'll be able to put this trade on at a higher price. All right, listen, I did my best to try to show you in my Neanderthal way how you can change your charts to put any one of the many different charting studies we have there. And I also tried to give you a little hint on when I like to roll up or down my strangle, so I can answer those questions for you live. Anyway, if you want to contact me, my email is bat@tastylive.com. If you want to speak to the Grand Poobah himself, his email is tom@tastylive.com. We're pretty easy to find if you want to email us. But even more important, if you want to talk to us, please, that's nice. But while you're doing that, transfer, bring your account, open a new account at Tasty Trade. I think you can get up to $4,000 depending on your account size for bringing your account to Tasty Trade, the #1 brokerage firm in the galaxy. Help us keep the lights on here, please.